Okay, good day to everyone. Now we're going to discuss about my slides about introduction to financial management. So we have like 26 slides all in all. So as you can see, you've seen a lot of pictures here, like all about money, all about calculations, all about financial planning, bookkeeping, and what else? About accounting, about economy, about dollars, about COSO and COBIT, and about SOX, Sarbanes-Oxley Act. So this is prepared by yours truly, Ninuri Condor Salas. So first, we have the key concept and skills. So in key concept and skills, we need to know the basic types of financial management decisions and the role of financial manager. The second one is to know the goal of financial management. The third one is to know the financial implications of the different forms of business organization. And the fourth one is the understanding to understand the conflicts of interest that can arise between owners and managers. So our next slide is about chapter outline. So in here, so in finance we have a quick look, then forms of business organization, business finance and the financial manager. Next is the goals of the corporation. Next is the agency problem and control of the corporation. Next, and the last one is the financial markets and the corporation. So on our next slide, we have how to organize a business. So organizing a business. So we have three types here. So it's either sole proprietorship, partnership, and corporation. So the first question is, who owns the business? So under sole proprietorship, the owner is the manager. In partnership, it is called partners, while in corporation, it is called shareholders. The second question is, are managers and owners separate? So for both sole proprietorship and partnership, the answer is no. In corporation, it is usually. So the third question is, what is the owner's liability? So same again for sole proprietorship and partnership, the answer is unlimited, while in the corporation, it is limited. Then the last question, are the owners and business taxed separately? So for sole proprietorship and partnership, the answer is no, while in corporation, the answer is yes. Okay, let's proceed to another slide. So in corporation, we have both pros and cons, or advantages and disadvantages. So for advantages, so we have the limited liability. So I will just read you the bold letters only. Then the second one is easy availability of capital. The third one for under advantages is perpetual existence. Then the next one is ownership transfer. Then the fifth one is build credibility. So you can just read here the a short explanation about each advantages. So another disadvantages for this corporation is the complex process, the double taxation, the conflict of interest, lacks business confidentiality, and the extensive rules. So again, from here, it's like self-explanatory. You can explain here shortly about each disadvantages. So we proceed to the next slide. So why we need to study finance? We study finance for marketing. So it is under budgets, marketing research, and marketing financial products. For accounting, dual accounting and finance function preparation of financial statements. Then management, strategic thinking, job performance and profitability. Then the last one is personal finance. It's related to budgeting, retirement planning, college planning, and day-to-day cash flow issues. So, what are the roles of financial managers? So, the role of the financial managers. So, we have based on the picture here, we have the firm's operation and financial markets. So these are all the roles of the financial managers. It's all related to, cash received from investors, related to cash invested in firm, cash generated by operations, cash reinvested in the firm, and cash returned to investors. So mostly the finance manager is dealing here the finances like cash of the company, and actually not only this. So these are one of those financial managers role. Okay, so on next slide, we have here the questions. What questions does finance answer? So in here, we need to answer what long-term investment should the firm take on? Where will we get the long-term financing to pay for the investment? How will we manage the everyday financial activities of the firm? So these are all the questions that the finance should answer. So financial managers, these are the top financial managers within a firm. Is usually the chief financial officer or called CFO. So under the CFO, we have the treasurer. The treasurer is the one who oversees cash management, credit management, capital expenditures, and financial planning. So next is the controller. So controller is the one who oversees taxes, cost accounting, financial accounting, and data processing. So on next slide, the financial management decision. So we have the capital budgeting. What long-term investment or projects should the business take on? Capital structure. How should we pay for our assets? Should we use debt or equity? Then the last one is the working capital management. How do we manage the day-to-day finances of the firm? So next. So financial management decisions. There are three major decisions in financial management. The first one is investment decisions. We have here the capital budgeting. So when we say capital budgeting, this is the long-term investment decision. So it is probably the most crucial financial decisions of a firm. So under an investment decision is the working capital management. So working capital management is concerned with the management of the current assets. So next, the second one is the finance decisions. So under finance decision, the second major decision involved in financial management is the financing decision, which is concerned with the financing. It is either mix or capital structure of leverage. So when you see the term capital structure, it refers to the combinations of debt. So meaning fixed interest sources of financing and equity capital. So this is the variable dividend securities or the source of fund. So the third one is the dividend policy decisions. So the third major decision of financial management is relating to dividend policy. So the firm has two alternatives with regard to management of profits of a firm. First one, so it can be either distributed to the shareholder in the form of dividends, or they can be retained in the business, or even distribute some portions and retain the remaining. So we'll proceed to the next slide. So what are the goals of the financial management? So the first one is profit maximization, profitability maximization, EPS maximization or the earnings per share, the liquidity maximization, solvency maximization, minimization of risk, minimization of cost of capital, minimization of dilution of control, wealth maximization, maximization of economic value added. So now, managing managers. So who manage the managers? Managing your managers. You can see in the picture here, you can manage your manager and other key stakeholders by focusing on results, responsibility, and reassurance. So managing the managers. Compensation plans. Incentives can be used to align management and stockholders' interests. Second one is the board of directors. Three is takeovers. The trait of a takeover may result in better management. Four, specialist monitoring. And of course, five are the auditors. So next slide is the funding source and financial markets. So here we have the internally generated cash flows. So there's a short explanation here. And we have also the primary and secondary markets like the dealer versus auction markets and others. Then we have also here the financial intermediaries. So it's raising money from investors for providing financial for companies. So we have here mutual funds. And here we have here financial institutions like raising financial in special ways like the banks and insurance companies. So next is the functions of financial markets and intermediaries. So here we have transporting cash across time, liquidity, payment mechanism like checks, reducing risk, providing information which firms use to hedge, make financing decisions, align employees' goals with stockholder goals. So here, another one of those assignments is the organization of the finance function. So it is called the structure of the company and their finance function. So we have here board of directors. Then the board of directors is the highest one. Then next is the managing directors or the chairman. Then we have here the chief financial officer. So under chief financial officer or the CFO, it's like a position under two. The first one is the treasurer and the controller. So under treasurer, it's again another departments or persons who manage the department. Like here we have the capital expenditure manager, fundraising manager, cash manager, credit manager, and pension fund manager. So under controller, so we have here tax manager, corporate accounting manager, cost accounting manager, and financial accounting manager. So since we talk about those structures, of course, each of them has their own functions and responsibilities within the organization. And the first one we have is the board of directors. So these are only those functions of board of directors, but actually there's a lot. So I just only choose a few of it. So for the sake of discussion, so the board of directors, or also known as the BOD, so it recruits, supervise, retain, evaluate, and compensate the manager. So it provided directions for the organization, establish a policy-based governance system, govern the organization and the relationship with the CEO or the chief executive officer, fiduciary duty to protect the organization's assets and members' investment. So the next one is the managing directors, or it's called chairman. So first we have one of the functions is to develop and execute the company's business strategies in order to attain goals. Provide strategic advice to the board and chairperson. Prepare and implement comprehensive business plans. And plan cost-effective operations and market development activities. So another personnel here, or shall we say managers or head of the department, is called the chief financial officer, or known as CFO. So the function is, or the responsibility is, for the planning, implementation, managing, and running of all the finance activities of a company, including business planning, budgeting, forecasting, and negotiations. So another person is called treasurer. So I know that uh, you are familiar with this position, treasurer. Because even in small organization, we have treasurer. Even in school, when we were in college, like we elected the position as treasurer. So one of the functions is the general financial oversight, oversee and present budgets, accounts, and financial statements to the management committee. Funding, fundraising, and sales. Financial planning and budgeting. Financial reporting, banking, bookkeeping, and record keeping. Control of fixed assets and stocks. So another functions and responsibilities for the capital expenditure manager or the capex manager. So there are a lot of responsibilities also, but I just choose some of it. So the first one is devising and administering a company's asset program, performing regular audits, preparing an annual budget outlining capital expenditure, reporting to management on capital expenditure, identifying important assets and tracking them, identifying and calculating the acquisition value of assets, identifying new assets for potential acquisition based on practicability and profitability, and ensuring the capital projects are delivered within budget, and maintaining depreciation schedules. So the next one is the fundraising manager. From the word itself, fundraise. So conducting research on fundraising opportunities. Second one is writing, submitting, and uploading press releases as required. Writing funding proposals and submitting this to potential donors. Preparing quarterly budgets. Coming up with ingenious ways to raise awareness. Next one is implementing a variety of marketing strategies and promotional campaigns. Organizing and attending non-profit events and networking with relevant stakeholders. And establishing good relationship with staff, members of the public, and the media. So another is the cash manager. So when you see the word cash, so see when you see in the most left side, upper left side, so you will see here the coins about money. So cash manager, so it's dealing with cash. So first function or role is to manage the income and outgoing cash effectively on a daily basis, develop strategies to optimize cash position of the company, predict cash requirements and cash position through analysis of budgetary needs and financial reports, forecast daily cash position by utilizing cash receipts and disbursement, analyze cash flow mechanism of the company and prepare monthly variance report, maintain integrity and accuracy in financial transactions and reports, and develop investments and loan procedures by analyzing fund needs and surplus funds. So the next one is the credit manager. So the credit manager is they are responsible for overseeing the credit granting process for a company. So their job is to optimize company sales and reduce bad debts losses by maintaining the credit policy. They do this by assessing the credit worthiness of potential customers and conducting periodic reviews of existing customers. So another managers here is called pension fund manager. So the function is the liaising with employees, working closely with human resources staff, recruiting, training, and or supervising a pensions administration team, developing pension policies and new pension schemes, making sure that pension schemes are effective and meet agreed quality, performance, and customer care standards. So here, so we know the controller. I think most of us uh, we are familiar about the controller. So mostly companies we have these positions, of course. So the first responsibility is the planning, directing, and coordinating all accounting operational functions. Managing the accumulations and consolidation of all financial data necessary for an accurate accounting of consolidated business results. And the last one is coordinating and preparing internal and external financial statements. So again, as I've said earlier, so these are only uh, several functions and responsibilities, but of course these are not limited onto these functions which you have seen here in the slides. So next is we have the tax manager. So dealing here about taxes. So tax manager perform tax services in compliance with laws and regulations, build relationships with clients to provide excellent planning, consulting, and expertise, manage innovative tax planning programs, review complex income tax returns, identify all tax risk. And the next one is the corporate accounting manager. So the function is the managing and overseeing the daily operations of the accounting department, monitoring and analyzing accounting data, and produce financial reports or statements. So it is highlighted here, financial reports, accounting data, and establishing and enforcing proper accounting methods, policies, and principles. So another slide. So we have here the cost accounting manager. So the cost accounting manager, he develops the cost standards for materials and labor, designing and implementing cost accounting system, analyzing production costs and recommending changes, overseeing annual physical inventory or stock take, hiring, training, and supervising cost and inventory accounting staff. And the last one for this slide is the financial accounting manager. So, financial accounting manager, managing and overseeing the daily operations of the accounting department. So, monitoring and analyzing accounting data and produce financial reports or establishment or statements. Establishing and enforcing proper accounting methods, policies, and principles. So, I know you are familiar of these positions in your company. So, this is the end of my slides. So, thank you for listening and have a blessed and safe day to all of us. Thank you once again.